Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
We want to get to a couple of tech companies for you. One that is sliding in today's session, Tim, we are talking about Salesforce.
Yeah, shares sliding by the most in close to 2 decades. This after the company projected the slowest quarterly sales growth in its history, renewing concerns that the company will be left behind in the AI boom. The outlook heightening investors' fears over Salesforce's sliding sales growth in the past year as the company has turned its attention to bolstering profit. Joining us now is Anurag Rana, Bloomberg Intelligence Senior Technology Analyst. He joins us from Chicago. Anurag, good to have you with us. It was interesting because as soon as these numbers came out yesterday, we were covering it live on TV and radio. We started to see the sell-off start, but it really gained momentum when people really started to see what that second quarter outlook would mean for the company. What's the big concern here when it comes to Salesforce?
See, the big concern is the size of Salesforce is too big that it's not immune to any macro slowdown. And that's what we are seeing right now. What is happening is corporations are spending a lot more money on hardware and chips right now, and they're reallocating their budgets from the bucket of other areas such as software and consulting and services, and they are buying hardware equipment with it. And that's really having an impact on not just Salesforce. Salesforce is not the only one. We saw the same thing happen with Workday a few days ago. And we envision this is going to be a same story that plays out in July when other software companies report, whether it's SAP, ServiceNow, Microsoft. Although we think it's going to be a lot less for Microsoft and SAP, but this is going to be a common theme of prolonged spending for the entire group.
You mentioned ServiceNow and other software companies not being immune to this. ServiceNow down 12%, Carol, in sympathy with this.
Hey, listen, so Anurag, is it just a case of delayed purchasing? So in other words, we're spending on, hardware, we're spending on chips big time right now, but eventually we're going to get to the software and we'll be spending down the road.
Yeah, and again, what had happened is we saw some signs of recovery a couple of quarters ago with this entire group. For sales, for example, their leading indicator is a metric called CRPO. It went from 11% growth to 13 and 13, and yesterday dropped down to 10. So what happens is we were baking in a recovery in the second half in terms of the growth rates picking up. Now that's probably a 2025 story. So for the next 6 months, not a whole lot happening in the space. So people are basically saying, let me go find value somewhere. That's what's really happening. We still believe long-term software still has a long way to go in terms of total addressable market. I think AI helps the space, but it's not going to be as quick and as easy to see as, let's say, NVIDIA. It's going to take some time.
Is there a cyclical nature to this, Anurag, with the idea that, maybe we won't see spending on software and services right now, but we'll start to see it pick up again once these companies have purchased the hardware that they need to sort of make the transition to AI?
Yeah, that is actually the waterfall effect. It's usually semiconductor and hardware first, then it trickles down to software subscriptions, then it trickles down to services. We have seen this game over the last 20, 25 years. It's not the first time, but we were surprised by the degree of this, what happens. And I think in addition to the reallocation of budgets, I think the macroeconomic situation, because of the geopolitical concerns, probably also forced CIOs and CFOs to say, let's wait and wait for that, $1 million software purchase or expanding our footprint right now.
Hey, we just want to mention a headline crossing the Bloomberg terminal. This is coming from Reuters. TikTok is preparing a U.S. copy of the app's core algorithm. So again, this is coming from Reuters. Hey, Anurag, before we move on to another company, any thoughts? I know this isn't necessarily your world, but to hear that, again, coming from Reuters, TikTok preparing a U.S. copy of the app's core algorithm. We talk so much about the importance of that algorithm to TikTok. Any thoughts?
I think this is a lot more about politics than it's actually technology. So, let's leave it at that. But I think, this story is not going to come to an end very soon. I mean, it's going to be dragged out.
All right. Good to know. Hey, listen, and appreciate you weighing in on Salesforce. Anurag Rana is Bloomberg Intelligence Senior Technology Analyst.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
So you know this, Elon Musk is the boss of Tesla, the world's largest EV maker. Tesla, though, in disarray. Layoffs are mounting, morale shattered, stock cratering, sales are anemic. Here's the thing, Carol. Musk also runs 5 other companies. SpaceX, X, formerly known as Twitter, XAI, that AI venture, the Boring Company, it's the tunnel company, and then the brain machine startup Neuralink.
Yeah, he's got his hands in a lot of different pots. He oversees more than 130,000 people around the world. That's a lot. And while he burns brightly at the center of this corporate universe, a less visible coterie of consultants, fixers, board, and family members really orbit around him, which gets us to today's Bloomberg Big Take, which I highly recommend you check out on the Bloomberg at Bloomberg.com because it's interactive and fun to check out.
Yeah, it is one of the most read stories on the terminal, and it maps out the people who make Elon's galaxy of companies run. The story by Bloomberg News senior technology reporter Dana Hull and Bloomberg News technology reporter Kurt Wagner. Dana joins us from San Francisco. Kurt out there in Denver. Kurt also the author of Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul. Check out this story and more from the Bloomberg Big Take on the Bloomberg terminal and at bloomberg.com/big take. Great to have you both with us. As Carol mentioned, it's a fun, interactive piece that you should definitely check out online and click around a little bit because you can learn a lot with your cursor. Dana, I want to start with you, and I want you to set the scene here from the Tesla perspective. Just how bad are things at Tesla and in the Muskonomy?
I mean, they're pretty bad. To lose 30% of your, to be down 30% at this point in the year is pretty significant. And we've seen globally sort of a slowdown in EV sales, and Tesla, got rid of nearly 20% of its workforce in April. So just a lot has happened. LinkedIn is full of people talking about how disappointed they are at the way the layoffs went down. And simultaneously, Musk is out raising money for his latest startup. So there's this kind of growing consternation that he's not fully focused on what's happening at Tesla.
All right, Kurt, come on into the conversation because, we think there's 6 different companies, right? And I guess they all maybe don't seem compatible, but what really matters, right, is what's going on in Tesla and the profitability. Because if things are going well, maybe investors and individuals look elsewhere. But when things start to go wrong, Tesla, the moneymaker, if you will, things are maybe looked at differently.
Yeah, I mean, we're seeing this right now in terms of the complaints that we're hearing from Tesla investors about Elon's time, Elon being distracted, right? When Tesla's doing well, when the stock's going up, Elon's allowed to sort of tinker with all of these other businesses that he's running, and people sort of just accept that and they let him do that. But when things at Tesla aren't going well, all of a sudden his time is called into question, his attention's called into question. And you have to remember, almost all of Elon's wealth is tied up in Tesla too, right? So when the stock is doing bad, that affects the loans that he takes out, that affects his liquidity, his ability to finance some of these other businesses. So Tesla truly is like the engine behind this entire universe. And so when things are going poorly there, it really does have a trickle effect.
All right, so Dana, how did you guys figure out? I've been playing with this. Tim's been playing with this online.
I'm trying to count how many names. There's dozens. That's all I'll say.
We lost track, right? And some of them work for him directly, some of them don't. So how did you guys kind of figure out how many or who you wanted to put on this list?
Yeah, so I mean, Kurt and I spent a lot of time kind of going back and forth with this spreadsheet of names, and it was tricky because it's by no means definitive, right? And, if you did a traditional org chart for X or Tesla or even SpaceX, it would be obsolete in like a week because executives come and go,
Ouch.
There's layoffs. So we didn't want to publish something that was going to be immediately stale. And so we really kind of tried to focus on the key executives at each company. But more than that, the kind of stable of investors, family members, advisors, legal strategists, people like Jared Birchall, who oversees Musk's family office, kind of like these longtime loyalists who are with Musk through thick and thin and pop up over and over again. And then we just sort of had the idea, well, let's make it a solar system that's kind of fluid and dynamic with Elon at the center. And I think it turned out really well. And,
I do too.
I think you can learn a lot about a lot of these people. I mean, Kurt knows this as well as I do from working on his book. A lot of these names come from trials, depositions, a lot of them, like when Musk was first thinking about buying Twitter, I mean, there was a trial transcript that had all of these text messages from all of these friends. And so So, we pulled these names from a lot of public records.
Okay, so I want to go through some of the names here, and I start with the folks who are closest to Elon's orbit. Dana, you mentioned Jared Birchall. Kurt, I want to ask you about Kimball Musk, Elon's brother. By the way, there are a few folks on this list who have the same last name as Elon, which we'll talk about in a minute. But Kimball, someone who's been close to Musk his entire life, and who's also served on boards, various boards of various companies, Kurt.
That's right. And I think he's one of those people, one of the few people probably in this orbit who has been known to push back on Elon, right? And actually call him out in certain things. We know that when Elon was looking to buy Twitter, for example, Kimball was there basically saying, are you sure you want to do this? Like, this feels like a bad idea. And that's not the kind of thing that Elon hears very often. And so I think having someone, who is a family member, who obviously is a huge supporter of his brother, Kimball is certainly an ally, but at the very least is willing to sort of challenge some of his ideas, I think makes him sort of a unique person within this orbit. Dana could correct me if I'm wrong, but I feel like that's a unique role that he sort of plays compared to some of these other folks.
Oh, for sure. I mean, the sort of rap on Elon is that he's surrounded by yes men, and that Kimball, as his brother, is like one of the few people who can actually tell him no, or feels confident telling him no.
Yeah.
I also should note, Kimball makes a pretty good steak. I was out in Colorado a few weeks ago, and I went to one of his restaurants. Just randomly, a friend wanted to go there.
You talked about this.
Should I try to expense the meal? I think I should. I was doing some serious research. Kimball was not there. I did ask the bartender if he comes in much, and she did say he's been known to make an appearance. Remember, he is a chef.
Okay.
Okay. I'm getting off topic here a little bit, though.
That's okay. We like that. Just shows, interesting folks in Elon's orbit. Dana, who would you consider when Elon has to think something through beyond maybe Kimball? Like, who does he go to?
Well, that's a really good question, and I think it depends on for what. So if we're talking about geopolitics or the 2024 presidential campaign, it's probably people like David Sachs. If we're talking about a lawsuit, it's probably Alex Spiro. If we're talking about raising money for X.AI or one of his other ventures, it's probably Jared Birchall. So I think it sort of depends on what the topic is. But I think what's interesting to think through about Elon is that this is a guy who became a millionaire when he was in his 20s. I mean, he made his first millions when he, sold his PayPal shares and started SpaceX back in 2003, I think, or 2002. Mm-hmm. And then, when you become very wealthy at a very young age, I think it's hard to trust people. And so the people that Elon trusts tend to be people that he's known for quite a long time. And a lot of these friendships date back to those very early days.
Kurt, and one of the things I was thinking about as we went through this story that you guys put together is that often when we bring up anything to do with Elon's orbit, we talk about Elon. But there are really important, I think about the cover story, I think that was on Businessweek about SpaceX a few years ago that really talked about, Gwen and how much she was behind kind of the success of it. And I just wonder, I think about our audience, who they should know about in Elon's orbit to kind of build on what Dana just said.
Yeah, I mean, I think the whole reason we did this project is he was running 6 companies. You can't actually run 6 companies and be present all the time, right? So there are people like Gwen Shotwell, who you alluded to, that are sort of, holding down the fort when Elon's out and about. And so I think Gwen is certainly a great example at SpaceX. Linda Yaccarino is the CEO of X. We've talked about her often, and she's on the list. So I think, Dana has a handful of Tesla executives that are very prevalent and important to keep that company running when Elon's off doing other things. So the whole purpose of this project really was to give people a sense of like, who is running the day-to-day of these companies when Elon is at one of his other businesses. And there are very important, very relevant people on this list. And so I think it's, for people who care about Musk or the Muskonomy, as you mentioned, it's a good, it's a good universe to have a familiarity with.
Is it also important? I think it was the Wall Street Journal that was talking about inside Donald Trump and Elon Musk's growing alliance. And, Dana, do we need to be thinking that maybe Elon could find himself in some kind of significant position in the White House? And so these people become even more important in terms of Elon's businesses?
Yeah, I mean, the Wall Street Journal story was fascinating. Musk pushed back on that a little bit today.
Okay.
He tweeted earlier today that there has been no discussion about a role for me in a Trump White House. But, the election is still several months away, and clearly Musk is going to have some kind of influence, whether that's a cabinet position or just being an informal advisor. I mean, we already know that Musk served on President Trump's business councils during the first administration. So it would not be unprecedented for him to play some kind of role, even though Musk seems to be sort of throwing cold water on that idea. But yeah, I mean, I think that Musk's role in the election is going to be key. We know that David Sachs, who's a friend of Musk's, is hosting a fundraiser for Trump here in San Francisco next week. This is, influential people tend to influence each other in all kinds of ways. And, again, we just really hope that people will take time with this interactive graphic and get to know these other names. Because if you're an investor or an employee or a customer of any of these companies, you should really get to know the people beyond Elon who have a lot to do with how the company is operating.
I was struck by the two names around Neuralink, Siobhan Zillis, who would be familiar to people who've been following Elon closely for a couple years, because she doesn't just work at Neuralink. She's also connected to Elon in another important way, Kurt.
Yeah, she's the mother of, I believe, 2 of Elon's children. And so it just kind of goes to show you, the relationships that he has with these people oftentimes are much broader or much deeper than just the business aspect of things. And I think one of the, if you read the accompanying story with this graphic, what Dana and I tried to do was give people a sense of, like, if you work for Elon or if you have a relationship with Elon in one capacity, you sort of are expected to show up in all of the other areas of his life where he might need you. And so we saw that probably most prominently with the Twitter takeover, right? He shows up, walks in the building with the sink, and all of a sudden all of these people from the various corners of his universe show up with him. And, Siobhan's a unique example. Not everyone's, having children with Elon, of course, but the point being is that it's not just like a one relationship thing. If you work with Elon at SpaceX, you might have to help out at Tesla or X in the future. And that seems to be a pattern that we've noticed over the years.
We're going to ask each of you, and I'm going to start with you first, Kurt. One name you want to leave kind of our audience with, because you guys have done the homework in a big way and put out names that we don't typically maybe talk about when we're talking about Elon's orbit. So just, 30, 40 seconds here, one name.
Sure. It's a little bit of a well-known one, but I just think he's so important, which is Jared Birchall. And I was just literally writing a story last night. He's, as Dana mentioned, Elon's sort of money guy, his business manager. And I was just writing a story last night. He's being named in lawsuits alongside Elon. He basically anything that has to do with money and Elon, Jared's involved. And so I just think, he is so incredibly important to understanding the broader universe here.
Okay, Dana, same question over to you. One name you want to leave our audience with?
Omid Afshar. So Omid works for Elon and he's like this kind of like chief of staff role. He was at Tesla. He oversaw the construction of the Tesla Gigafactory. Then he was on like a weird leave of absence, and he popped up at SpaceX as like a vice president. And he's just always around. Like Omid is kind of like the new Sam Teller, if you remember who Sam Teller was. But Omid has a very influential role.
Love this. This is going to be a go-to, I know, for us as we go through different Elon-related stories.
Maybe Elon Inc. also. This is like epitomizes
Perfect.
Elon Inc., guys. So this is great.
So appreciate it, you guys. Thank you so much. Dana Hall, she's senior technology reporter at Bloomberg News in our San Francisco bureau, along with Kurt Wagner, technology reporter at Bloomberg News, also author, of Battle for the Bird, joining us from Denver.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It is time to tell the tale of Charlie Mullins. From a working class background and working in a toy car factory to living in a multi-million-dollar London penthouse with a view of the Thames. And along the way, kind of building a very, very successful plumbing business that employed many in his own family. And then Timmy ended up cashing in when private equity came along. He made lots of money.
Okay, so life is good, right?
Yeah, sounds like it.
Or is it? The story, Carol, among our most read on the Bloomberg terminal and in the latest issue of Bloomberg Markets magazine, co-written by Saba Meddings and Michael Sasso of of Bloomberg.
With more, Michael joins us. He is Bloomberg News economy reporter in our Atlanta bureau, along with Bloomberg Markets features editor John Hechinger, who edited the story. He is in Boston. Mike, let's start with you. You reported it out. Tell us about Charlie Mullins and his success story.
Yeah, well, that was largely done by my colleague Sabah in London. But yeah, she found him. He is quite the presence in the UK. I understand he's a bit of a personality, has some controversial comments on political topics often. But yeah, he does. He came from a very working class background, built the largest plumbing business in the UK. I think he sold it for something like over £100 million or so. And he's, I guess, living the life. He has a penthouse in London. I think he lives near Tom Jones, the singer.
I love that.
So, yeah, a plumber just down below Tom Jones. So, yeah, very interesting.
All good.
Okay, so Michael, why does private equity want to, quote unquote, roll up home service businesses? Because these are businesses that I think have been pretty tough to scale historically. Whether or not you have, 4 folks working on air conditionings on your team or 400, you still got to send them all to homes and offices to work on those air conditioners.
Yeah, well, that's true. But there's a few things working in their favor. It's a very fragmented industry. I mean, you don't have a dominant player like a McDonald's or a Starbucks. And so imagine it's kind of low barriers to entry. You can buy, a plumber or an HVAC company in Phoenix, for example, and then just add onesie twosie around the country. And some you've taken a small company in Phoenix and built it into a fairly large company. There's a firm I interviewed based in Atlanta that went from one acquisition, built up 26 or 27. Suddenly, it's a $1.5 billion a year company. So it actually can be scaled. It's a very fragmented and it's so low barriers to entry, as I said.
Well, John, Michael, talk to us a little bit more about, I feel like this is something that we see private equity do, whether it's vets, whether it's, as you report on plumbers, kind of these home service companies, hospitality. I mean, we have seen private equity go into these industries, doctors' practices, right? And kind of roll them up into one big business.
Yeah. Well, it has happened in a lot of industries, and for sure the last several years it's caught fire in the home services industry. And we don't know how it's going to play out. As we mentioned in the story, there's some concern about you're taking a family business that has personal relationships with thousands of customers, millions of customers around the country and the UK, and you're creating, corporatizing it. And so there is some pushback. There's some of these owners are kind of angry. They think that when they went corporate or they were bought out, sometimes the service is not what it once was. Certainly that's what Mr. Mullins in the UK thinks. Here in the US, a little bit too early to say. I talked to a number of owners who are fairly happy so far. They think that they like some of the changes that have been made.
But what I'm saying is that this is something we see private equity do, right? They find industries that are often kind of just separate small business owners, if you will, whether it's veterinarians. I've seen it with our vet. They became part of a large practice and then private equity got involved. I've seen it with healthcare folks, where there are individual practices and then all of a sudden you see private equity buying up, and they're doing that with plumbers, right? Or electricians. Like, these are areas that they are finding opportunities. We're seeing this increasingly.
Yeah, well, like I said, some of that goes back to the fragmented nature of it. It's hard to go into a business where there are huge businesses, dominant businesses, and to roll them up. It's a lot easier when it's a fragmented industry. And also, money's been a little bit tighter in recent years, with the higher interest rates and whatnot. And so it's a little bit easier to digest a company that you're maybe a $50 or $100 million plumbing or HVAC shop than it is acquiring a multi-billion-dollar company. So interest rates kind of play a role in this a little bit.
Hey, Michael, I'm curious in terms of the reporting that you did around the United States, what you heard from the large home services providers / mom and pop home services providers you spoke to about why they've resisted selling to private equity or to a larger company.
Yeah, that's interesting. There's a fella here in Atlanta where I am, Jake Cunningham. He owns a very large plumbing services firm called Superior Plumbing, and he has resisted multiple times. In fact, he says he gets offers, sometimes once a week, sometimes more to sell out. And he's got 5 members of his family working for Superior Plumbing. He's concerned. He's concerned that these companies will slash heads, basically overly corporatize things, take local control out of local people's hands. And he told me he pays one of his top people, his general manager, $500,000 a year. Would one of these corporate firms see this person as a cuttable overhead? And he's worried about, at least he said he's worried about his people.
John Hechinger, we want to bring you into the conversation. You edited this story. I was talking, we were talking with Michael about this idea of how this is kind of out of the PE playbook of finding an industry where there's opportunity and kind of rolling it up into maybe a larger investment holding. I am curious how this story came on everybody's radar and how you guys wanted to report it out. Walk us through a little bit of that.
Well, Mike had sort of identified this trend last year and did sort of a shorter story about what was going on in the U.S. And then when Saba came on to the story of Charlie Mullins, it was irresistible. It's rare that you can have a photo of a guy with a Rod Stewart haircut and a purple suit in a business magazine. So we were delighted that he was available. He wanted to talk about it, and also that he would very openly talk about his regrets. It's not easy to get people in the industry who've sold out to say what it's really like, and he had hoped that his children would work at the company as many founders do once they're bought up by private equity firms, but they found that the culture just changed too much, and it wasn't a place for them anymore. So they're actually deciding to open up a business to compete with KKR at a headquarters right down the street. So he's not giving up.
Hey, John, I'm wondering if to you this sort of signals any kind of pushback to private equity or a trend that we're starting to see. I mean, I was struck because early this morning there was an article published in the Wall Street Journal in the column Heard on the Street about the headline is, "You can thank private equity for that enormous doctor's bill." And I'm wondering if we're starting to see some sort of pushback here to private equity.
Well, there has been some.
All right, we're having some problems with John's line, so we're going to see if we can fix that out. Michael, going back to you, though, it is interesting, right, as Tim brought up, in terms of some of the blowback. I do feel like we've covered some of this blowback in terms of private equity.
Yeah, I want to send the same question over to you, Mike, because, talking about this today, we're a $60 million check for a plumber in Atlanta is a pretty darn good payday. And you have to have some serious conviction to not accept a check like that could, set somebody up for life with truly generational wealth. And I'm wondering if you're starting to see any sort of pattern when it comes to the folks that you're speaking to, that they're like, okay, well, an exit would be nice, but not this type of exit.
I did get some of that. Certainly, Mr. Cunningham. I will say I spoke to some people, let's say privately off the record, who had some concerns. They did sell out. Maybe they didn't feel comfortable kind of telling, but they did have some reservations about some of the ways that their people were being treated. Again, they were reluctant. Frankly, most of these people I think were under some kind of non-disclosure agreement, so they were not free to. But there certainly is. There's a within the industries. There's a deep reservation. It's very split. You could talk to people who have not sold out, and there's almost the feeling like this person, this competitor caved or sold out within this coterie, this contingent that has not sold out yet.
Yeah, and I will point out in your story, the Wall Street controlled companies who are doing this and picking up some of these companies say they're professionalizing these businesses while preserving their connection with customers. So just putting out. Anyway, there's a lot of fun details in this story, including Mr. Mullins' custom-made red Steinway piano. So I highly recommend you read this story. Michael Sasso, thank you so much. And of course, our thanks to John Hechinger. This is among our most read.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, 18 minutes left in today's trading session. Shortly, we're going to head over to our TV colleagues, count you down to the close on this Thursday. In the meantime, Charlie, of course, just breaking down the numbers. What are you laughing at?
This is like the longest, shortest week ever.
It's like, come on,
Yeah, well, there's a
Friday.
lot. I mean, look, there's a lot happening. Tomorrow we get PCE. It's the Fed's preferred measure of inflation.
Yeah.
And our next guest says
No,
that getting inflation to the 2% target is going to be a challenge over the next year without some real deterioration in the economy. Sorry, I cut you off.
No, I kind of cut you, and that's kind of that kind of day we're having. But it does feel like Fed speakers, or was it former New York Fed President Bill Dudley questioning maybe that target, right?
Maybe it's going to be a rate hike.
Maybe it's not. Maybe it's not 2%. I don't know. And others, maybe that 2% isn't real. Let's see what Brooke May has to say. She's managing partner at the wealth management firm Evans May Wealth. They've got about $1 billion in assets under management, and she joins us from Indiana. Hey, Brooke, good to have you here with us. I don't know. It's a funky little week. It's a funky little environment. Top of mind for your customers, your clients, when they are thinking about their assets, their money to invest.
Right now, they want to know where the economy is heading. There's a lot of mixed messages out there, a lot of mixed signals, and just trying to decipher through the noise and figure out what direction are we going really weighs heavily for investors right now. As you alluded to, we don't think that getting to 2% is going to be very achievable in the near term. When we look at PCE, it's kind of plateaued. It was on a steady decline for a prolonged period of time. And just recently, it's kind of settled at that 2.7, 2.8% level. That's where we expect it to come in tomorrow. And we think it's going to be a grind from here to get to 2%. So if we see 2.5% on PCE, we think that the Fed could feel comfortable starting to indicate at least that rate cuts are coming and somewhat imminent.
Brooke, how long of a grind is it going to be to get to 2%?
It could be a while. It could be another 12 to 18, maybe 24 months. We do see inflation starting to slow down. When you look at CPI, for example, there are quite a few components that have really settled and aren't really giving us issues. But you've got housing, for example, that makes up about 30% of CPI, and shelter's up, I think, about 5.5% year over year. So it's kind of a story of a bifurcation within the economy. Some areas, have settled and are tame, and others still continue to be hot.
Atlanta Fed President Raphael Bostic indicated last week that officials are rethinking their estimates of neutral, and, quote, there may be reasons to think the baseline steady state is higher. John Williams of the New York Fed, his predecessor at the New York Fed, Bill Dudley, did write earlier in a Bloomberg column that he believed the neutral rate had risen substantially. I guess the big important discussion to have around this, Brooke, is not will it get there, will it not? But if we are seeing growing narrative around that it's going to be maybe above 2%, how does that make you rethink how to invest? Does it really change strategy a lot?
It does. There are clearly areas of the market that are more sensitive to interest rates than others. And if we're going to be in a higher for longer camp, there are areas, for example, like small caps, Russell 2000 companies, that you may want to be light on in this environment or be very selective. About 40% of small cap companies are not profitable. Therefore, they're relying heavily on debt. And a significant portion of Russell 2000 companies have floating rate debt versus the S&P companies that have only about 10% floating rate debt. So that weighs heavily on earnings. And we don't think small caps are going to be the leadership over the next 12 to 18 months. Doesn't mean you won't make money, but we do think that there are going to be companies that have stronger earnings growth and a clear path forward that are going to do better.
I'm wondering what you're seeing in terms of asset allocation, or what you're going to do in terms of asset allocation, given that this is your outlook, this is what you're seeing over the next year or so. How does it change the way that you position your clients?
looking at individual companies, not necessarily sectors. There's clearly a bifurcation, not just in the market, not just in the economy, but within specific sectors. Retail is a great example. You look at Walmart, Costco, Kohl's, Amazon, Target, they're all telling very different stories. And it's clear that some corporate management has been able to navigate this environment better than others. We know, for example, the low-income consumer is struggling more so than the middle class and high-income consumer. And so you would assume that Walmart is struggling, and they're not. They're doing well. And so you have to be very selective in this environment and really take a bottoms-up perspective. We want companies that have strong free cash flow, low leverage, and really strong balance sheets.
Yeah, that's a really good point. We've definitely seen that in a big way in the retail sector in terms of some that have done well, some that have not. Tells you a lot about kind of what's top of mind for consumers. And you're right. Fundamentally, you got to look at what their business is and how it's doing, because you can't kind of throw them all in one bucket. Having said that, you do like Amazon. Tell us about your thoughts on that one. And I mean, the behemoth, it feels like, when it comes to retail.
It is. And you know, it's very broadly held. When you look at Amazon, though, historically, it's really it's gone through trading ranges, and then it's broken out, and then a trading range, and it's breaking out. And so when we look at Amazon, it's trading right now at the same level that it was in 2021. And so when you peel it back and you look at the different divisions within Amazon, they're all hitting on all cylinders. AWS, for example, we expect sales to be up 17% year over year. We see expanding margins in the e-commerce business. And for their digital advertising, we expect it to be up 24% year over year. So Amazon's doing a lot of things right. And if you don't already own it, we think you should.
Okay. It's not, you don't think it's too late?
No. Amazon, it's trading around 40 times forward earnings. And again, it's trading at the same level that it was in 2021. Amazon's always trading at an expensive multiple. It doesn't mean you won't make money in it.
Yeah, it's an interesting chart, right? I'm just pulling it up on the Bloomberg, and just to paint a picture, it's kind of a V chart, if you will. You look at where it was back in 2021. You're right, like we're back at the levels we are today, and it took a big hit going all the way down to kind of late last year, which we saw with a lot of names, certainly kind of bottoming out last year, and then we've seen it come up. So a real V, if you will.
Can you give us 30 seconds on Goldman Sachs real quick?
Goldman's one of our top picks right now. When you look at CEO sentiment, it's improving. A year ago, 3/4 of CEOs thought that we would see a recession in the next 12 months. Now less than a third believe so. So when we see M&A and IPO activity pick up, Goldman is going to be a beneficiary. They're already doing well on earnings from their advisory business, and we think that activity will spur additional growth. It's cheap. It's only trading at about 12 times earnings and about 1.1 times tangible book value. So we think it's a good investment.
And just a basic metric, it's up about 16% so far here in 2024. Look at the KBW Bank Index, not always apples to apples, but nonetheless, it's only up about 7%. There's a lot more names in there, including some of the kind of maybe smaller players. All right, gonna leave it there. Hey, Brooke, thank you. Brooke May, managing partner at the wealth management firm Evans May Wealth, $1 billion in assets under management, joining us from Indiana.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.